Well, what is going on, guys, and welcome into the video. Well, we have the CPI release coming tomorrow, and it will dictate the movement of stocks over the next month and will absolutely determine the course the Fed takes next. Basically, this number will determine if the rally continues or if stocks head back down towards all-time lows. So let's discuss that today and exactly how to handle this possible destruction or big run in your stocks. I just ask that you gently hit that like button and consider subscribing too. It's super easy to do. So everyone outside of this guy knew that inflation was coming, and man, did it ever hit hard, and it has just been persistent and just actually gotten worse over the past few months. As you can see right here in this chart right here, it has continued marching up until March, which actually I just said March twice. It's kind of funny. Well, okay, anyways, and then it somewhat kind of leveled off for 3 months or so before trending back up again in June. And we saw that exact pattern before, as we saw it hover around 5% for 5 months last summer before starting to march up from there to over 9%. So we are still waiting for that kind of inflection point we need to reverse this trend. Now, this month could absolutely be the start of the inflection point and inflation is moving down. But given that the Fed just now started getting aggressive with rate hikes, and those hikes typically take months and sometimes even longer to show up in the actual inflation data, I still don't think the rate hikes have had their effect yet on that overall data for inflation, so we could see it continue to march up until those rate hikes actually start to take effect. And I said last month that I thought the CPI number would be higher for June than it was for May, and that is exactly how it played out. Back in June, everyone was banking on falling prices of oil at the end of June being a big factor in bringing down the number for June. But it only trended down towards the end of June after hitting its record highs earlier in the month, so the little bit of relief that we saw at the pump at that time was not accounted for in those numbers. And you add in the fact that rent has continued to trend up almost unabated. I mean, it's not nearly as aggressive as it was really over the past year or so, but it's still trending up, along with food remaining elevated, and it seemed clear to me that the number was going to come in hot once again in June. It just made sense for everything that was going on. But this month could finally be the inflection point we need to start seeing inflation come down. I mean, we've had several earnings calls mentioning the cost of raw materials are coming down and actually hitting their bottom lines. And we're seeing folks like Elon saying he thinks inflation has peaked as well. And he's involved with multiple companies that use a lot of raw materials and were involved in a lot of things that, basically he would know whether inflation was coming down or not because it affects the bottom line of all of his businesses. And kind of looking across the data, you see stuff like lumber and oil prices all plummeting, and at least here in the US, we're finally seeing some relief at the pump in July, so it makes sense that we may see a number that we actually like that is actually, actually lower instead of going up higher every time. So really there are 3 scenarios that will play out, and I will discuss what I'm doing specifically in each of those scenarios. So let's start with the positive one first, and that is we see it stay the same or actually inflect down some into the 8s. Now, hopefully not too much now. All that's going to do is have everybody not believe in the number in the first place, and then we just have all the conspiracies and all the other crap going up, and we don't need any more of that sort of stuff going around right now. But if we get this, I expect the rally to continue for the rest of the month, at least until the next reading. And the reason for the rally to continue is because Wall Street likes certainty, and the Fed will stay the course they have laid out if this reading comes in at this range. It's too early for them to declare victory, and not enough of an inflection down to slow the pace of rate raises, so Wall Street will continue to trade based upon the plan that the Fed has already laid out. And in this scenario, I will continue to buy stocks as they hit my price targets and kind of continue my modified DCA I've been doing throughout this downturn. It seems to be a different stock that I'm buying every week, so I will just continue to be a slow buyer after being a super fast buyer and buying massively in May and June. That was the time to go wild and buy really big, but don't worry, that doesn't mean you missed out completely. The deals are still great on many stocks, and I will continue to be a buyer, just not a crazy buyer like I was during that time frame. But the second scenario is we see it really inflect down. And if that is the case, Wall Street will continue with this rally, and I think it's actually going to accelerate as Wall Street starts to speculate on the Fed actually not being as aggressive as they have laid out to this point. Now, I know I just said the market hates uncertainty, but in this case, the uncertainty moves towards the Fed's current plan being the worst case scenario, with a chance that they will get even more kind of, dovish towards the end of the year, and the market will rally big on that speculation. And in this case, my strategy is the same as the first scenario. I will just continue executing buys at my price targets. And lastly, we have inflation coming in hot. I mean, like well over 9%, 9.5, 9.4, whatever. Anyways, anything higher like that, the market will not wait for earnings or anything else to just completely sell off. They will immediately start to dump stocks because we all know that not only will the Fed continue to be aggressive like they've already said they will, they might be more aggressive at that next meeting with, a 1% rate hike or more, or they may call a session before that to announce a rate hike even earlier than the originally scheduled meeting. So basically we get 2 rate hikes for the price of 1. Either way, this is going to induce strong selling pressure into the markets, and probably not as bad as the media or YouTube will make it out to be, but it will create big selling pressure in the markets once again. And in this case, I will do 2 things. 1, I will still be buying, but I will be selective, as when we have a big fear event like this, the VIX is going to spike, everybody goes wild, and the sell-off is going to last longer than a day, guys, so I have time to be patient and wait. Waiting a day or 2 or even more will bring stocks not only into my price target ranges, but into the lower parts of those ranges on some of those stocks, and some may even hit stupid low price territory. In this scenario, if that really happens, I will buy as much of the fear as I can during that time, just like I did back in May and June. This is where planning and preparation and all that stuff we talk about all the time on this channel, guys, had you buying in May and June like crazy, and then it was easy to be patient and not FOMO into this latest little rally, but instead you could kind of sit back and relax and pull cash for an opportunity like this, and this is exactly what we preach in our group. Doing evaluation, setting a price target, buying the fear, and being patient and saving and working to put away cash for the next opportunity when it comes. And trust me, guys, there's always another opportunity that comes. I watch people all day long and myself jumping in and helping out members with all that. And yes, even FOMO in this market, we help with that too. Can anyone say Palantir after its latest FOMO-inducing run? I mean, good grief, that stock just shot up fast from $6. Oh, and don't forget to join the group using the link in the pinned comment and check out the 4 free courses. We got lots of live streams with me. I put out several videos a week I cannot put out here on YouTube, or you can just, kind of slide into my DMs as you have full access to me. So check out the pinned comment if you're interested. But let me be clear, if Wall Street wants to get stupid again, please let them. The average bear market lasts 289 days or so, and we are all well into that now. And by the time it flips and the numbers look good and you have confirmation that the bear market is over, we are in the middle of the next bull run. So I will not let opportunities pass me by waiting for this indicator or that indicator. Just like during the financial crisis, I will be buying the arrows like shown on this chart because nobody can time that bottom perfectly. And I know I hate to bust the bubble here on YouTube and the media and lots of other smart folks who like to, sit around and try to plan all those sort of things like that. But there is no indicator or formula that tells you when that is, so it's useless to try to time that event. Put yourself in a spot with planning and proper preparation where no matter what happens, you're in a win-win position as a long-term investor. So hopefully this was helpful, and if you don't know how to get a price target or how to do evaluation and want a step-by-step process for doing that, building wealth, and you want direct access to me and much more, remember to check out the pinned comment to become a member and at least look at everything you get before, deciding whether you want to be a member or not. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.